Foreigners are dumping stocks. I'm your host, Steve Van Metre, and thanks for joining me today. And Goldman Sachs says the pain trade is higher. Foreign investors say, please keep buying. We've got more to sell. Let's start where we picked today's story up with Goldman as we're starting out with the tactical flow of funds. November pain trade, they say, is to the upside. We'll see what you think. How about this? They note $1.710 trillion worth of mutual funds report their year end on Halloween. We talked about this. They've been big sellers here, and Goldman says, hey, when they stop selling, that gets bullish. How about the corporate buyback machine? Everyone banking on corporates to come back and buy stocks. Mind you, they've had one of their biggest years of buybacks ever, and it still hasn't taken stocks higher. But hey, on Halloween again, we have the machine gets turned back on. The question is, will corporates actually turn to holding bonds where they're yielding 4% versus buying their stock back? Then we look at pension funds. Month end, equity supply gets cleaned up here. And what happens with these pension funds is that they actually are going to rebalance. They're going to sell stocks, buy bonds. Goldman's saying once they're done with that, again, clears the air for a move higher in stocks. November equity inflows, they are U.S. investors. We know this, big, giant buyers of stocks. They're buying like crazy. That is important note, but we'll look at the selling side here in a bit. How about non-economic systemic demand? If big, we'll look at this deeper. Up big, $199 billion to buy. They estimate down big, still almost $42 billion to sell. Let's continue on here because we look at systematic demand. What do we know? Baseline over the next week, there's still some buying. If the tape is flat, if stocks just go sideways, there's buying here. Up big, you're almost $50 billion. Down big, Goldman says, hey, they're only selling $17 billion. That's not a whole lot. How about over the next month? Stocks stay flat. You still got buying pressure, about a little over $1 billion a day. Up big, $200 billion. This is their bull case. Down moderate, well, you've only got $18 billion selling. Down big, almost $42 billion is selling. That could be big. We'll keep an eye on that. But what is the bear case here? Well, for that, we've got to turn to our chief strategist, Jeff Snyder, and his research into flows of what foreigners are up to, because he says they matter in a big way. Let's check this out. What we note here on this chart, this was sent out to his pro subscribers to his deep dive reports. How about we have here in black 6-month cumulative net buying or selling of long-term treasuries. We note that when the black line is going up, they're buying bonds. How about the red? And this is cumulative net buying or selling in equities. Red here we see. So let's go look here at what's going on. We note, and we'll look at some charts as we get into our momentum screens. We notice they were big buyers here, of course, in bonds in 2011 going into 2012. We see that repeat in 2013, 2014. How about March 2015? Jeff notes is an important indication. Also, March 2018, and notably, look at this. Back here in May, they started turning up, and look at this record amount of buying of long-term bonds. Same time, record amount of selling of U.S. stocks. All right, and he didn't again note that even though no one else in the world that wants bonds, private to foreign investors want U.S. Treasuries at a record amount, record demand, not enough to keep up with the selling of U.S. investors, but significantly demand. Now, let's talk about the CTA positioning, the machines. Everybody wants to know what are they up to. They're not moving. The nearest upside trigger, based on what I can find, is around 38 to 3,900 on the S&P. As you get to 4,000 plus, you see a lot more buying demand come in, but there's nothing to show that these machines are selling anymore at this point. Let's look at the momentum screen. S&P 500 turned positive. RSI is now over 40, now at 51, moving higher. The MACD has turned a positive cross. Momentum Timer Pro, if you're tracking those daily signals and trading them, well, it flipped to a buy signal 4 days ago. Mind you, this is as of the Friday report, so it did pick up that dip. It's holding no position because we only have 4 days of buy signals. We haven't seen a big turn here in momentum. 4 days isn't enough unless you, again, are a trader. Upside target 388 to 389. That will be a nice move higher from the Friday close around 374. Downside target is a relook at the recent lows, 357, 358. Now let's take a look at the charts here, and we'll also look at those flows from the foreigners here. Here's the bull case on the S&P up here into the sell zone. So you note we're at 387, 388. There's where Momentum Timer Bro picked it up right here 4 days ago. Again, this is a Friday report, so it doesn't pick up the Friday's trade data yet. Pick that up. Now, if you are joining us on the Traders Summit, you get a special discount, but you've got to sign up for that. Again, it's free Traders Summit. Check it out. Anyways, let's continue back to the charts here and see where is the bear case, and that is a retest of these recent lows. Break out of that to the downside. Watch out below. Now, let's go to Jeff Snyder's research and see if we can find where these flows hit the equity side. We first note 2011, so let's go find that here and zoom in. And here we have, they were selling right into here, the equity side. Stocks went down. Next, we have 2013, 2014. Let's slide over just a little bit here. And note, there wasn't, the foreign selling here didn't have any impact really at all. But how about this? They were selling going into March of 2015, and notably stocks came down. How about they were selling here again in 2018, and note stocks went down. And then, of course, they're selling actually back here in May. They've been selling this whole rally up here and to the downside. This is where foreigners selling. If you want to know who the biggest enemy of U.S. buyers of stocks are right now, it's foreigners. They're selling. Again, record levels here. Let's continue on. Because what do we have next is, of course, we're on the wrong slide. We need to switch over here to tech stocks and take a look. What do we have? Momentum positive on QQQ. RSI over 40. That's positive for the momentum, now at 49. MACD positive cross. Momentum Time Pro again picked up those buy signals, 4 consecutive daily buys, not holding a position because you don't take big positions on a 4 consecutive buys. If you're a trader, great, you take some positions and build into it. If you're a longer term investor, you just kick back and wait for something down here to change. Next upside target 282, 283, downside 260, 261. Let's head back over the charts. And what do we see on QQQ? Now we got to zoom back in. And what do we note? Upside target is pretty shallow, 282. Why? Because we've seen some selling here. A bigger upside. Look at that 6-month volume profile. So we could see a move as high as 290. There have to be quite a bit of buying support to get there. Mind you, again, foreigners have been selling every move higher that U.S. investors bring. Downside, you break below, of course, these lows and off to the downside. I mean, we zoom out and you can clearly see beautiful topping pattern. Downside risk is way down here on QQQ 220. I mean, I'll look at the S&P. If these rallies don't hold, and you're talking about moving into the, rallying into a downward trending, 100-day moving average in blue, green, 50-day moving average trending lower, downside here on S&P 320 if this doesn't hold out. So U.S. investors clearly have their work cut out for them. All right, let's talk about the bond market. We don't see anything moving in terms of the CTAs. No machines are buying, although the short covering level keeps dropping by the week. So at some point they'll be back. How about momentum? Obviously negative. RSI is at 21, massively oversold on TLT. MACD's got a negative cross. Momentum Time Pro, 21 consecutive daily sell signals. When this flips back into the green, you may want to start taking a position. Doesn't have to be a big one. Just take small positions and build into it. Friday close 93.17, downside target just a little bit below. I'm going to give you a case of why maybe the selling is now over. Upside target just above 98 to 99, but we're going to look at Jeff's research as we go through this too. Now, on the short-term signals, what is the big factor? If you're watching the markets on Friday, what is that? This big move in volume. So normally you see a gap down, capitulations, the sellers unwind all the last of the positions, the buyers flood in, big surge in volume on this downside move. So that would actually suggest that this is potentially stopping volume, and that is stopping this flow down. Now, let's look at the bull case. That's up here to 98.83. The bear case, well, there's a lot of support. I mean, you're talking historically, right back to a place where people have bought, held, and sat on long-term bonds. So I would say at this point, not a lot of downside move left in that. Let's take a look at Jeff's research. We go back to 2011. What do we know? Foreigners were buying all of this dip, and look, price went vertical out of that. They continued buying in 2013 and 2014. They were buying all of this downside move, and look, prices went vertical. They were buying here in March. What happened? Prices went vertical. They were buying all through here. Back here in 2017, 2018, what happened? Price, again, went vertical. It's almost as if once the U.S. investors are out, prices go vertical, and they've been buying all the way in here and all the way in this down move too. Obviously, they're thinking that prices are going to go sky high. If rates get to zero, a lot of people ask me, where could TLT go if rates get to zero? You're talking, potentially close around 217-ish. So foreigners clearly see that the long bond goes higher. Maybe they think it's going negative, but they're buying big, looking for that big vertical move in the bond market. All right, let's continue forward. That's what we've got next. We've got gold. Everybody's interested in the metals. Everybody still remains bullish, even though we see inflation trends coming down. Now, what do we note on these machines? We're not going to see them jump in until gold goes quite a bit higher. So if you're looking for support on the machines, if you're buying based on that, you've got a bit of a wait to come because their target short covering levels are much, much higher. All right, let's take a look now as we dig into GLD. Momentum remains negative. RSI is at 45, so we're starting to see some shift in momentum here as RSI peaks over 40. And how about negative cross on the MACD? Look for that to turn at some point if we see some continued buying support here. 5 consecutive daily sell signals. So nothing, if you're bullish on this isn't a time to jump in yet. You might, again, wait till this daily sell signal flips to a buy, then start taking small positions if you're a trader. If you're a longer term investor, you got to wait this one out. Friday's close at 154, upside target just above 155, 156, downside break below 151, and you're in trouble. Let's take a look at gold here. And why do we know that there's some problems? Because you see this is a topping pattern. It's hitting this, just below its 200 weekly moving average. It is oversold on the RSI, the MACD. Everything here would say, hey, there's a long-term buy here, but we've seen this event before. You look back up at this event and you say, hey, the RSI was oversold, and you see the MACD was trending down and it went lower. And so there you have kind of your bear case. Let's zoom in a little bit, and you can see you have a little bit of a double bottom, perhaps some upside move, maybe into the 50-day moving average, which has been a nice layer of resistance to the downside. Let's zoom out a little bit more. The 5-year chart, again, this is a topping pattern, risk to the downside. Let's look at gold futures, because that's what most people keep an eye on gold. What do we see? Breakdown of here would take us into the 1500 range. Upside target, you've got 1700. The machines aren't even buying in until you're well above 1750. So again, there's a lot of heavy lifting U.S. investors need to do here to get this show with gold to turn around. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.